Thinking about transferring a property into a limited company? Well, you better watch this video as Louise and I discuss stamp duty land tax. Pradeepan, I should get that right.
Pradeepan.
Okay, yeah. It says, will there be any stamp duty when the property is transferred from an individual to a limited company? Interesting. If there's any outstanding mortgages, also, if someone is having several properties, can they transfer it into a limited company and claim incorporation relief? Now, that's two big subjects. Okay,
Massive.
So let's just talk about transferring one property. And let's imagine, Louise, let's imagine transferring two properties. One of them is below 500,000 and one is above 500,000 because there are a special tax. Now you're thinking about this. So the first one is the standard. So let's imagine it's £400,000. What stamp duty land tax would you pay by moving it to a limited company, please?
Well, you're going to pay the normal, and I say normal, I wish it wasn't, the normal stamp duty land tax rates that all of us pay when we buy, say, a home. But you're also going to pay the higher rate, which is the 3%. And unfortunately, if any member of the limited company is classified as foreign, and I'm not going to jump into the detail of what foreign actually means, then you might find yourself on the sharp end of an additional 2%. So you just need to be careful when you're looking at moving an asset because, of course, stamp duty land tax is payable within 14 days post completion. So you haven't got a lot of time to amass the cash. And if you haven't realised how much cash you need, you could be in a little bit of hot water, to say the least. I think there is one question just to come back to is stamp duty land tax payable? Typically, if you look at HMRC's website, they've got a fantastic section on this, and they describe that if what you're getting in recompense is the shares in the company, then that is consideration, money's worth, and that is what the stamp duty land tax will be based on. So I'm afraid simply gifting an asset to a limited company in which you obviously have the shares, you're not going to get out of the stamp duty land tax, sadly.
And there is also an aspect of the £500,000.
In terms of if you're buying it to reside in as opposed to, is that what you mean?
Well, here
you talk about the ATED.
So, well, I'm just thinking about the £500,000 charge. So I'm just going to read this out from HMRC's material here. So if a property is over £500,000, HMRC, quite rightly, and I just want to do this word for word because I think we've got to be careful when we talk about online. And it's live. One word could mean something completely different. But it says here, stamp duty land tax is charged at 15% on residential properties costing more than £500,000. And we had a client, funny enough, who bought a property, lived in the property, wasn't aware that you'd have to pay 15%. So you do need to be careful on this. It might not be applicable to you, but I think people listening into this, it might be. So finishing off, it says here, bought by a certain corporate bodies or a non-natural persons, whatever that means. Basically, it does say these include companies, partnerships, including partnerships, collective investment schemes. And there's some things like ATED, which we're not going to go into too much detail now. But one thing it does say, it says the 15% does not apply to the property above the £500,000 by a company that is acting as a trustee or settlement or bought by a company which is then used for, and it's got a list here. So if you can picture the bullet points in your mind, that'd be useful. So a property rental business, a property developers trader, property made available to the public, interesting, financial institutions acquiring property in the course of lending, and a couple of other things, including farmhouses. The interesting thing is here, it is very much specifically looking at people buying a home in a limited company, which they then live in. So that's what the 15% SDLT charge is all about. So I don't think it's necessarily to your kind of question, but I think it's worth advising on that because we had a client who bought a property into a limited company, didn't say what it was used for, just said I'm buying a property in a limited company, and then moved in. And then the conveyancing solicitor said, well, actually, I'm going to have to charge you 15%. And they weren't aware of it at all, but we weren't even aware that I was going to live in it. So really interesting about how that came about, but you do need to be a bit careful with that.
You do.
Before we go any further, I want to explain that there are many live events that you can register for free. There are 4 events that's showing: HK2UK to help people move from Hong Kong to the UK, the Property Expert Panel. If you're a property investor and property developer, this will be very useful for you. Tax Q&A, if you want to ask proactive tax questions in regards to structures and how to mitigate tax in the future. And finally, UK tax return Q&A, as it says, to deal with questions in relation to your tax returns before you submit it to HMRC. Don't forget that these events are live and will be shown on YouTube the day after. So why not register today, start saving tax tomorrow.